Good morning. Good morning, all you magnificent melonheads of the world. Happy Friday. Today's May 3rd, 2024, and it's Jobs Day. We got the big non-farm payrolls report this morning, and, well, it sucked. I guess I should say it was just okay. 175,000 jobs added, way down from last month's 300,000 plus number, and a decent chunk below what the market was expecting. And bad news is great news for stocks. The market is ripping higher on this terrible news for the average person that the jobs market is getting weaker. The market just loves it. And you're probably sitting there saying, Jack, wait, why? What, people not being hired as fast, fewer jobs added than expected? How is that a good thing? That's not right. Well, in a free, fair, independent market that had actual price discovery, you would be correct. The market should go down on that news. But silly rabbit, that is not the market we have. We don't have a free market. We have a Fed market. And in this market, the one singular driver of stock prices, it isn't company earnings. It isn't whether they're hiring or profit margins. No, it is one simple factor. It is, when is the easy money coming back? That is the single primary driver of asset prices across the board in this market, in this entire economy. When will the Fed go ZERP? When will the Fed go burr? And, well, fewer jobs being hired or fewer people being hired, fewer jobs created, that means ZERP and burr is that much closer. And, well, the algos, they can just taste it. And the second that jobs report was reported today, massive green candle up. The algos just absolutely loved it. Let's talk a couple of numbers here. We had 175,000 non-farm payrolls, 175,000 jobs added. That is higher than the 243,000 that was expected. Higher. Did I say higher? That was lower than the 243,000 expected. A good clip lower there. It was also way down from the upwardly revised 315,000 from the previous month. All right. Remember last month, the jobs number was ridiculously hot. They actually revised that up by even 12,000 more to 315,000 from the 303 that it was previously at. So a big step change down in hiring. Unemployment rate ticked up from 3.8 to 3.9%. Now, the unemployment rate has kind of been in a band from 3.7 to 3.9 for the last couple of months. So until we get that 4 handle, unemployment isn't a problem yet. Actually, until we get well into a 4 handle, unemployment is actually good for this economy. Remember, we are in a Fed, not this economy. I can't use economy and market interchangeably. I'm trying to police my language here. Higher unemployment is good for this market, not for this economy. And the market wants to see higher unemployment to a point, because until we get to about 4%, 4.2, 4.3, right? That's the sweet spot. That's where the Fed says, okay, maybe we can start thinking about cutting rates pretty soon, or, it's not really a problem. Once we go above 4.5% unemployment is where the Fed said, don't worry, we can beat inflation without seeing unemployment rising above 4.5%. If we get above 4.5%, all of a sudden the market might stop and say, you know what? Maybe it's not just about ZERP and burr. Maybe it's not just about the Fed. Maybe we need to actually start paying attention to people working and people buying things and companies make money, instead of when will these unelected bureaucrats flood the system with liquidity and make money rain down from the heavens. I don't think the market is really going to start caring about that until we get above 4.5% on unemployment. And we're a long way from that right now. I mean, we ticked up from 3.8 to 3.9. It's a move in that direction, but a small one. We also got the, what did we say? The participation rate was unchanged at 62.7. Jobs or industries that are seeing the big addition in jobs, plus 56,000 in healthcare. That is a function of two things: the aging population demographics in this country. The boomers place more of a strain on the healthcare as they age. And also the trend that we've seen in a lot of earnings. Health insurance earnings are down. Medical device makers' earnings are up, because so many people are getting elective procedures done because they put that off for years. They didn't want to go to the hospital and catch the vid in the early 2020s. So now they're getting that stuff done. that knee replacement, that hip replacement. They're finally having that work done. That is driving a lot of hiring and a lot of sales in healthcare. We also had plus 31,000 jobs in social assistance. You'll forgive me if I don't think that is necessarily a sign of economic prosperity. More people need to sort whatever social assistance is. All the people you hope you never end up sitting in front of work in that category. So when you see a lot of hiring there, that's not necessarily a good thing. Plus 22,000 in transportation and warehousing, plus 20,000 in retail. I found that number a little suspicious because I've seen a lot of indicators, same-store sales slumping, stores closing, mass layoffs in retail being announced. So I'm a little suspicious of that plus 20,000 number in retail there, plus 9,000 in construction. That's a big slowdown, that construction number. Now, construction includes both homes and larger multifamily buildings, offices, and warehouses. And keep in mind, we're building a lot of factories. We've seen a big boom in construction spending since the Inflation Reduction Act and the CHIPS Act were passed. Well, I guess we're going on a year and a half ago now. So to see only 9,000 hired in construction, that's a big slow there. Pay attention, home builders. I wonder if that 9,000 jobs added in construction might be an indicator of problems starting in the housing sector. By the way, check out a video my buddy Travis at Real Estate Mindset did with Melody Wright when they were touring a couple of towns in Texas around the Austin area. Entire developments that were like abandoned midstream, and the Tyvek sheeting is just blowing around in the wind, hanging off of these houses that have no siding or windows. I wonder that slowdown in construction, is that starting to show up in the jobs report? Also, we got 8,000 jobs added in government. That is noticeably lower than some of the previous months where we saw a lot of jobs added in government. So pretty no one sector standing out other than healthcare and social assistance. And again, I don't think those are really signs of economic activity. It's just a sign of demographic problems in this country. Average hourly earnings up 3.9% year over year. That is down from 4.1% in the prior month. So the market will like that. You won't like that because your raises are getting smaller. But the market is going to like that one because it shows a little bit less wage pressure on inflation. I would add CPI at 3.5. So year over year, at least in the last 12 months, the average person got a bigger raise than the government's stated rate of inflation, which I know many of you, self-included, are skeptical of. But the month-over-month number, this is interesting, in average hourly earnings, they only rose 0.2% in the month of March. Now, CPI in the month of March was 0.4%. So average hourly earnings were only half of the rate of inflation. That means consumers are getting clobbered here once again. Now, for a few months in a row, we had seen inflation was outpacing, wage gains were outpacing inflation. Noticeably, in the earlier months this year, late last year, but now it looks like that month-over-month trend is flipping, which means, real wages are starting to fall once again. So that was a pretty important takeaway from the jobs report. So the market just loves this, just absolutely skyrocketing on this news. And speaking of bad news that the market totally ignores and just runs higher, did you see Apple's earnings yesterday? Apple's earnings were horrible. Horrible numbers reported from Apple. Total sales fell 4% globally. Sales in the Americas down 1.5%. Sales in China down 8%. iPhone sales down 10% year over year to 50.1 million iPhones, way below expectations. We had theorized last week when we saw Verizon and AT&T's earnings that, hey, all of the phone makers are reporting a slowdown in the upgrade cycle, less equipment sales. That's bad news for Apple. Stories about iPhone sales being down in China, bad news for Apple. Well, those stories were all were accurate. All right, big slowdown in iPhone sales. Apple is the iPhone company. They have other businesses, and those other businesses, some of them are growing very rapidly, but still, Apple lives and dies by the iPhone, and the iPhone sales suck here any way you look at it. But you know what? Nobody cares. Why? Because Apple announced they're going to buy back $110 billion of their stock, the largest stock buyback in history. Forget the fact that the company ain't really making much money, that their sales are down, their profits are down. $110 billion stock buyback. They also announced a paltry 4% increase to their already paltry dividends. So they're returning a little more cash to shareholders in the form of dividends, a lot of cash they're returning in the form of share buybacks. And so Apple stock was up on that news. Guys, it's artificial. All right. If your business isn't growing, you can avoid short-term pain with stock buybacks, but you're not innovating. You're not driving any long-term growth. And so it's a Band-Aid solution. And in the long run, Apple's going to suffer from this. Uh, Speaking of innovation, interesting that Apple decided to pump that $110 billion into stock buybacks instead of ramping up production for their innovative new product, the Apple Vision Pro. Remember the giant set of stupid goggles with a big old battery hanging off the back? Lo and behold, that one, not really a needle mover for Apple. You'd think they'd be ramping up production of this hot new product, this $3,500 headset that makes you look like an imbecile when you wear it because you're sitting there doing this on the wall. Lo and behold, nobody wants to wear those things. So Apple has an innovation problem. Other products, which includes AirBuds and the Apple Vision Pro, down 10% year over year. Now, we don't know how much of that is Apple, AirBuds or their little pen or all this other stuff. But what I do know is the Apple Vision Pro is a massive disappointment because you can add Apple Vision Pro to the other products category, and the other products category is down 10% year over year, which means Apple Vision Pro did absolutely nothing. That product is a total flop for Apple. We also got earnings from Coinbase today. They were pretty good on the Bitcoin, just larger transaction. Bitcoin people love to FOMO, and Coinbase earnings today supports that. And another whistleblower just wound up dead. What is going on in the aircraft industry? Well, let's talk, guys. Why don't we shrink my big melon of a head and see what is going on in this market? And guys, while we're doing that, don't forget that like button. Don't forget that subscribe button if you're new here. Come have your coffee with the melon heads every morning as we go through the markets. And look at that. There's your jobs report right there, guys. Tell me this market doesn't care about the plight of the average person, and all it cares about is easy money in one simple candle right there, guys. Fewer people finding work, and the market just loves it because it means Fed go burr. They're going to print money. They're going to lower rates. It's going to be raining down from the heaven. It's going to artificially inflate asset prices. We're all going to be rich. The plight of the average person be damned. Who cares if inflation comes roaring back and takes away even more quality of life from the middle class and the poor? My number go up, and I'm happy. That is what's going on in markets right now. Plus 55 points for the S&P 500, up 1.09% ahead of the opening bell. The Dow, same thing, big green candle up, currently up 473 points, about 1.25% higher. And look at the NASDAQ, up 284 points, 1.6% higher on the NASDAQ. This market just loves bad news for the average person, doesn't it? And we have got a noticeably weaker dollar this morning. Look at that, 104.77 on the Dixie. 2 days ago, this thing was at 106. Another 53 basis points down today, 0.5% lower. And a weaker dollar, that's putting upward pressure on stock prices, on asset prices. Why is the dollar weaker? Because the market thinks there is a greater likelihood that the Fed cuts rates sooner now, a greater likelihood that they slow their QT. All these dovish actions are now expected by the Federal Reserve, which will weaken the dollar. And so traders are front running that big step change down in the Dixie today. And same thing, look at interest rates, sharply lower interest rates, noticeably in the middle of the yield curve here. The 30-year Treasury is down 4.6 points, yielding 4.672%. The 10-year Treasury down 7.5 points, yielding 4.490. Big move in the 2-year, down 9.5 points to 4.783. And the 1 month is at 5.381. It's up about a point from yesterday. So yields falling. That means people are buying bonds. Bond prices are inflating here. Again, market is trying to front run those dovish actions by the Fed here, really celebrating this substandard jobs report. And looking over at commodities, oddly enough, gold is not really reacting to this. You'd think gold would be looking better here, but it's not. Lower interest rates, lower Dixie, that is usually rocket fuel for gold. But June gold futures trading at 23.12. That's up just barely $3 higher, 0.13% for gold. And silver is actually red today, down a nickel for July silver futures at 26.76, down about 0.25%. We've got platinum is up 1%, palladium is up 1.75%, and West Texas Intermediate crude oil futures for the month of June at 78.90. That's down another nickel this morning. Again, we're getting lower into the 70s there. Slower inflation showing in the oil market here. as WTI prices cross below 80 and keep going. Bitcoin is higher this morning. Bitcoin was loving that report. Again, asset prices moving higher. We were at about 58,000 a few minutes ago. Then the jobs report comes out and Bitcoin rockets $61,041 on Coinbase, up almost $2,000 today. Bitcoin likes easy money every bit as much as stocks do, and Bitcoin has been trading like a tech stock lately. So loving this news. Now, I would add, guys, take a look at that red line there. There is your prior support now acting as resistance around $61,100. So watch that level. A move above that means Bitcoin could be heading back towards challenging that all-time high. A rejection here and a move lower means we are bound for that 52 and change number. Also, speaking about Bitcoin, we got earnings from Coinbase today. Coinbase reports first quarter revenue beat after Bitcoin rally leads to a surge in profit. Better than expected revenue in its first quarter results. The cryptocurrency exchange, the largest platform in the U.S. for buying and selling tokens, reported $1.64 billion in revenue versus $1.34 expected. The shares are up roughly 30% this year after soaring almost fivefold in 2023 alongside a steep rally in the price of Bitcoin. Coinbase reported better than expected revenue in its first quarter earnings report Thursday. The stock was trading a little bit lower. This was before the jobs report came out. But I just want to point out these things right here. Profit in the quarter includes a $650 million mark-to-market gain on crypto assets held for investment in connection with the company's adoption of updated accounting standards. So they're seeing big benefits from the price of Bitcoin, but most of it driven here. Consumer transaction revenue was $935 million for the quarter. That's up well over 100% from a year earlier period. Total transaction revenue almost tripled in the quarter to $1.08 billion. So this is just proof that Bitcoin traders love to FOMO. The price moves up, and so you get more people buying more trades, and Coinbase gets paid on transaction revenue. And Coinbase has actually swung to a gain now. It was down about 4% earlier this morning, but currently trading at $230.89. That's up about $2 or 0.85%. Now let's talk about the jobs number. Let's get into the data here. This is the non-farm payrolls report as produced by the U.S. Bureau of Labor Statistics. The employment situation for April of 2024. Total non-farm payroll employment increased by 175,000 in April, and the unemployment rate changed little at 3.9%. Again, that's up from 3.8. Job gains occurred in healthcare and social assistance and in transportation and warehousing. So let's look at some of the charts here. Now, here is the actual non-farm payrolls increase. All right. This chart hasn't updated. Let me refresh and see if I can. Here we go. Now we can update it. So here is the number of jobs added. All right. So keep in mind, anything positive is showing job growth here. And mind your y-axis. A little bit of a chart crime here. It starts at 180 and goes up to 300. So here is the jobs that were just added, 175,000. Big step change down from that 315,000, which was upwardly revised from 303. Remember, guys, we've seen a lot of those downward revisions to prior months in a lot of the jobs reports. Well, we didn't get that today, at least not for the March numbers. The February numbers, I'm not sure if those were changed. I'd have to go back and study the numbers a little closer. I'll talk about that on my afternoon stream if there's anything there. But a big reduction in hiring, still adding jobs, but hiring at a much slower rate, and the market loves that news. Looking at the unemployment rate, it came in at 3.9%. That's edging slightly higher from 3.8. Now, if you look at this chart showing the changes in the unemployment rate, again, we've kind of been range bound between 3.7 and 3.9, but you do notice a slight uptrend in this chart here. We are still trending up, but not at an alarming rate. So, the soft landing people are going to be just unbearable today. Get ready for that, guys, because they're going to be celebrating this, even though this is nothing to celebrate. They're going to declare victory over inflation. Stocks are going to go higher. It just comes with the territory. Also, we have got labor force participation rate unchanged this month at 62.7%, same as where we were in March. That, too, has been kind of range bound between 62.5 and 62.8. So nothing really alarming there. Average hourly earnings. Now, this is another one that the soft landing people are going to like, even though it's not good news for the average person. Average hourly earnings increased 3.9% versus a year ago That is down sharply from the 4.1% we saw in March, the 4.3% in February, the 4.4% in January. Slowing wage growth. This is what the Fed wants to see. It's not what you want to see, but it's what the Fed wants to see, because the Fed is afraid if you make more money, you're going to go out and spend more money, and that could lead to price increases. And so they want to see wage growth come down closer to their 2% target that they just love to talk about. So the year-over-year number, quite encouraging, still higher than the year-over-year CPI number, right? CPI was 3.5% for the month of March, and wages rose 3.9%. So the year-over-year, that looks like, hey, people are still getting a real increase in their wages adjusted for inflation. But take a look at the monthly numbers. This was kind of interesting here. Non-farm payrolls for the month of April, the average hourly earnings up 0.2% month over month. Now, that's down sharply from the not sharply. It's down from 0.3% in March, down big from the 0.5% we saw in January. But the thing about the month over month number is CPI was plus 0.4% for the month, which means the rate of inflation, at least month over month, was double the rate of wage increases in the same month. So, hey, prices are going up faster than wages now is what this month over month number is. If you zoom way out versus a year ago, wages are rising faster than prices. But if you get a little more local, if you look at just the last couple of months, inflation is outstripping wages. So that means the average person's cost of living, the average person's quality of life heading lower as that cost of living heads higher. So that's the numbers. We're going to get a little bit more into the part-time versus full-time and, what is gig work doing? What are multiple job holders doing? We'll talk about that in the afternoon stream once I've had a little bit more time to go through the numbers. Let's talk about Apple's earnings here. Really just not good numbers from Apple. Apple announces the largest ever $110 billion share buyback as iPhone sales drop 10%. And right away, you can see the manipulation of the messaging, how Tim Cook got exactly what he wanted from the financial press here. Forget the fact that the best-selling product in history is down 10% versus a year ago. We're going to lead with Apple announces largest ever $110 billion share buyback. So forget that we're making less money. We're going to manipulate our stock price. And so the market celebrates that. And, iPhone sales down 10%. That's like an afterthought in the title there. Apple's fiscal second quarter earnings were slightly higher than Wall Street expectations. Those Wall Street expectations were artificially low. They always do that. Overall revenue down 4%. iPhone sales falling 10%. This was not a good earnings report. Apple shares climbed 7% in extending trading on Thursday after the iPhone maker reported fiscal second quarter earnings that topped the artificially low estimates and announced an expanded stock buyback program. Apple announced that its board had authorized $110 billion in share repurchases, a 22% increase over last year's $90 billion authorization. It's the largest buyback in history, ahead of Apple's previous repurchases, according to data from Bernier Associates. However, overall sales fell 4%, and iPhone sales fell 10% for the year over year during the quarter, which Apple attributed to a tough comparison versus last year. That tough comparison versus last year, that is horse manure. Tim Cook is trying to put a positive spin on a terrible quarter. Anywhere you look at it, chip sales are slowing. All right. The only good news for chip sales in iPhones and iPhone sales was from Qualcomm, who sells a lot of chips to Huawei, which is eating Apple's lunch in China. Everybody else reported a decline in smartphones. The semiconductors reported a decline in smartphone chip sales. Apple, AT&T, Verizon reported declines in equipment upgrades, decline in phone sales. You could see the signs everywhere. iPhones just weren't selling. There's also a lot of, shipment channels that track the movement of phones in and out of China. They were saying, hey, iPhone sales in China look like they're down about 10%. That ended up being right on the money. Fewer people are buying phones. The iPhone has not innovated. All they do is add more or bigger cameras or add more memory or, exciting new colors. You can get your iPhone in pink now. Isn't that crazy? That's not innovation. And I guess Apple was hoping the Apple Vision Pro would come to the rescue, but, no, it didn't, because other products, which includes the wearables, was down 10% year over year also. So really not a lot to celebrate here in Apple stock. And I want to send another shout out to Frog Capital on X. Guys, I've mentioned him like 3 times this week already. Frog does really good, really rapid analysis. Whenever earnings come out, he can laser focus, zero in on the big outliers within the data points so quickly that he does that. And he was right on the money with Apple yesterday also. That's at Frog News at Twitter. And check this one out here. This is a pretty good analogy for the whole economy. Talking about Apple's net sales. The product's net sales was $73.9 billion in April of last year. It's $66.9 billion at the end of March of this year. So, you're looking at $7 billion less in product sales for Apple. Most of that is iPhone, but also iPad and wearables. $7 billion less in products. But look at Apple's services, $20.9 billion a year ago. 23.8 this year. So pretty much a $3 billion increase in services. And that's pretty close to what we're seeing in a lot of the GDP reports and a lot of the inflation reports. We're seeing goods inflation is actually negative in a lot of categories. Prices in goods have stopped going up. Some have started going down, but services are rising astronomically. It's kind of a whole economy-wide change that I've noticed over the last few months. And you can see it right here in full display in Apple's earnings. Big increase in spending, a big decrease in spending on products, partially offset by a big increase in services. Apple stock this morning is up 7.6%, trading at $186.22. That's $13 higher ahead of the opening bell. So again, guys, with Apple, it's all about that stock buyback. Everybody, at least for the moment, is ignoring the fact that their business is slowing and that they don't really have a path to growth. I mean, they guided for low single-digit growth in this quarter. I don't know where they think that's going to come from. I guess the market liked that news, but Apple's got a real innovation problem, and the Apple Vision Pro sure as heck is not going to solve that. Maybe we could just slap another camera on that next generation iPhone and see what comes out of that one. Another important story, guys. I just saw this one, and stories that just make you want to shake your head. Whistleblower Josh Dean of Boeing supplier Spirit AeroSystems has died. That is the second whistleblower associated with a major aircraft manufacturer, or we could say associated with Boeing, in the last month. What in the Sam hell is going on in the aircraft industry? What are the odds that 2 whistleblowers associated with the same company wind up dead within a month of each other, in and around doing testimony in Congress or making depositions in court cases? What are the odds of that happening? Right? About the odds of a certain guy who owned an island in the middle of the Caribbean where wealthy people did inappropriate things to children. About the same as the odds of him unaliving himself, I would say. This is really gross. Joshua Dean, a former quality auditor at Boeing supplier Spirit AeroSystems, and one of the first whistleblowers to allege Spirit leadership had ignored manufacturing defects on the 737 MAX, had died on Tuesday morning after a struggle with a sudden, fast-spreading infection. Known as Josh, Dean lived in Wichita, Kansas, where Spirit is based. He was 45, had been in good health, and was noted for having a healthy lifestyle. He died after 2 weeks in critical condition, his Aunt Carol Parsons said. Spirit spokesperson Joe Buccino said, "Our thoughts are with Josh Dean's family. The sudden loss is stunning news here and for his loved ones." Dean had given a deposition in a Spirit shareholder lawsuit and also filed a complaint with the FAA alleging serious and gross misconduct by senior quality management of the 737 production line at Spirit. Spirit fired Dean in April of 2023, and he had filed a complaint with the Department of Labor alleging his termination was in retaliation for raising concerns related to aviation safety. Parsons said Dean became ill and went to the hospital because he was having trouble breathing just over 2 weeks ago. He was intubated and developed pneumonia and then a serious bacterial infection, MRSA. You got a totally healthy guy with a healthy lifestyle, middle-aged, 45 years old. This is not an old man. And then all of a sudden he comes down with this severe infection, rapidly deteriorates, dies 2 weeks later. And it just so happens that the guy was just fired for raising safety concerns on a company that has a horrible record of safety and a company with a record of suppressing whistleblowers and suppressing safety concerns in favor of keeping costs lower and keeping production numbers up. The second whistleblower in a month to wind up dead associated with Boeing aircraft. What the hell is going on at this company? I hope somebody does something about this. By the way, I'm a happy guy with no plans of doing anything untoward. By the way, if anything happens to Jack, it wasn't me. Let me just mention that. But guys, I read an article the other day about what's going on at Boeing. There was this story that I read. I don't have it handy, or I would have brought it up. I didn't even think to bring this one up. An entire tail section of a Boeing 787 went missing. Now, there's this thing at the Boeing factories when they find parts to be non-conforming, when there's any kind of quality control defect, they slap some red paint on it and they isolate it. They send it to this giant warehouse where they do studies on them, figure out what went wrong. Is it a manufacturing defect? Do we need to do a recall or anything like that? And this giant warehouse full of defective parts is where this tail section of the Boeing plane went. And it disappeared. Now, I don't know if you guys understand just how big the tail section of a Boeing plane is. There was something wrong with it. I don't know what it was. But this thing is the size of a freaking house. And it went missing from a warehouse where it's supposed to be isolated for quality control defects. And it turns out this whistleblower is alleging that this defective parts isolation facility has been used as an emergency source of parts by manufacturers, by Boeing. When they're short parts and need to get a plane done, they go to the defective parts warehouse and steal stuff that has been flagged for nonconformance and install it in planes. And they've been finding parts with red paint on them in Boeing planes. And somewhere out there, flying around in the sky, is a tail section of a Boeing plane that had something wrong with it. And some guy was up against the clock and decided he was going to go to this warehouse and steal this section of a plane that's the size of a freaking house. And nobody knows what happened to it. How many people, how many moving parts are involved in a scheme to move the tail section of a plane without anybody knowing about it? How many heavy lift engineers and drivers and security guards and other people need to be involved for something that big to just go moving? And then, oh yeah, by the way, it's flying around right now. Nobody knows what plane it was installed on and where it is. So Jesus, what is going on at Boeing? Good God. This company is just unbelievable. And let's see. Let's check in with Boeing stock. Boeing shares right now are trading, they're up 28 cents, 0.16%, trading at 179.20. Let's just say when I get on a plane, the first thing I'm doing is checking that little card in the seat in front of me. And I'm like, oh, great, it's a Boeing plane. Oh, good. Said nobody ever. I just want to say thank you very much to M&J, who gifted 10 Nobody Special Finance memberships. Thank you so much, M&J, for supporting the channel and for your hard work as a Blue Wrench and a moderator in the chat. Thank you very much. Guys, if you received one of those memberships, just tell M&J thank you for that in the comments. And thank you, Evan Francis, who says it's a bull trap. I heard Admiral Akbar was a melon head too. That's a trap. Until Disney decided to blow him up. Oh, yeah, Disney blew up Admiral Akbar right before the whole Carrie Poppins scene of Princess Leia surviving the vacuum of space and flying around like she's got a magic handbag and umbrella. Oh, that movie was so bad. It was so bad, Evan. How could they just nonchalantly kill Admiral Akbar? How do you do that? How do you just nonchalantly kill off everybody's favorite character? It's Disney. They figured it out. They figured out how to lose money with Star Wars. You got to love that company. Oh, good God. Bring back the classics. But is it a bull trap? I don't know if this is a bull trap because, I mean, if they're going to bring back the easy money, the Fed just made a big dovish move the other day. Look, if they do nothing, this market is going to tank. It's so top heavy and there's so much bad debt. It's bound to happen. But I don't think they're going to do nothing. They're probably going to Zerpenburg, and they're probably going to do it too soon. So, I keep a little bit of cash, or I write a lot of cash at the moment, just in case they don't do something and we get that buying opportunity. But at the same time, I like my gold, my silver, and my Bitcoin. Just in case they Zerpenburg, I have my dollar alternative assets there, and those are doing very well right now. But bull trap, I'm not sure. I don't know. It could be Evan Francis, but yeah, I can't believe they killed Admiral Akbar. Thank you, sir, for the super chat, the support of the channel. And thank you, Mr. Zeeble Fritz. Says, Red hijacking Bitcoin by BCH TGIF. I am not a Bitcoin Cash fan. I am not a Roger Ver fan. I don't like Bitcoin Cash. I think Roger Ver, he makes my skin crawl, to be honest with you. Sorry, I can't back you up on that one. Thank you for the super chat, Z, but I am just not a BCH fan. I don't like the altcoins. I've watched their performance over time. Some of them have moments where they way outperform Bitcoin, but over time, Bitcoin outperforms all of them. I mean, maybe you made a lot of money on Shiba Inu or Solana or something, had a big spike. If you got out in time, you made money. You did better than a Bitcoin holder. I don't try to trade the altcoins or the shit coins. Bitcoin Cash, I wouldn't lump Bitcoin Cash in with Solana and Shiba Inu or some of the joke coins. I'd more compare Bitcoin Cash to like an Ethereum or Litecoin, one of the second tier. I like Bitcoin. I like the original. That's pretty much what I stick to. I don't mess around with anything else. Thank you very much, Zebo Fritz. Appreciate the super chat, support of the channel. And thank you, Mighty Mike, for being a channel member. And he's saying reverse repo, 429, been stuck in the 400 range. Yeah, we were talking about this yesterday, Mike. I don't know what's going on with money supply. And I think reverse repo right now is pretty much tied to the money supply. If money supply starts dropping, reverse repo is going to drop. If money supply rises, reverse repo is either going to rise or trade sideways. Something is up with money supply. Now, Luke Groman is a great name on Twitter, by the way. You should be following Luke Groman. He's got a theory that the national debt has now become so big that interest rates are actually, higher interest rates might actually be inflationary, might be leading to higher inflation. Think about this. The average interest rate on the national debt is 3.22% right now, and there's $34.5 trillion of that debt. So I don't know I didn't do the math, but how much new money is entering circulation every month just from interest payments on the national debt? It's a good bet. It's about the same amount, maybe even bigger than the amount of money that the Fed is doing at QT. And remember, interest, we're paying for the interest on the national debt by taking out new debt, new loans. And when you make loans, money is created. And so the interest on the national debt could be the explanation for the growth in money supply, because the interest rate we're paying on the national debt has gone up. The principal has gone up. So the amount of interest we're pumping into the system has gone up. And so raising interest rates might not actually fight inflation, because it just increases the growth of the money supply via interest on the national debt. Now, that's just me trying to theorize here. And this is Luke Groman's theory. It's not mine, but it holds up. And I've been scratching my head trying to figure out, why did reverse repo stop falling? Why did money supply start growing? That is one plausible explanation for what's going on there, Mike. Thank you very much, sir, for being a channel member and for supporting the channel. And thank you to Nashville Poston Man, who says, bad news, we win. Good news, you lose. Perfect. Yeah, that's pretty much how it rolls for this economy, right? If everybody is getting a job, the market sells off and the Fed comes in and raises interest rates and says, no, we don't want you to have a job, so we're going to put you out of work with tight monetary policy. But if you're out of work, the market celebrates, yay, I'm going to be rich. And oh, sorry, you're out of work. Thoughts and prayers. Good luck to you over there. That is the prevailing wisdom in Wall Street. Thank you very much, Nashville Pasta Man. Appreciate that. And thank you, Grumpa, who says, Jack, don't hate the player, hate the game. I'm going to go right ahead and hate both, Grumps. Is that okay? I've got ample angst. I can spread it around generously across the board here. I can hate the game and the players, to be honest with you. Oh, yes, I can. Just watch me, Grumpa. But I get your point. It is well made. Thank you, sir, for being a channel member and for being a swell guy all around. And thank you, everybody, for having your coffee with the Melon Heads this morning. So number go up. The market likes your pain. Less hiring. Good for stocks. Zerpenberg is coming back. Odds of a rate cut are going up. I'll see you this afternoon for my weekly wrap-up live stream. Thank you to my channel members and Patreon supporters for everything you guys do for the channel. Links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. And everybody, until next time, live small and dream big.